Thank you everyone for being here for a very interesting talk by Professor Barbara Summers. Barbara is a professor of human judgment and decision making at Leeds University, business school, by the way, and also director of the Center for Decision Research. I met Barbara quite some years ago. I think it's nearly 10 already. We have been talking in Vienna, and I was really surprised that Barbara was telling me that before she started her career as a decision-making researcher, she has been in, I don't know how to tell this really, credit, like working in a company on giving credits. Is this correct?
I was working in financial services. I was at a credit reference agency.
And this is important for us because we have a lot of students who actually do work, or not all of our students work besides their academic studies, and some of them become researchers afterwards, but that's the reason why I'm very happy you're here, because this is really important to us as an organization. What I also wanted to say is that Barbara is working on decision making, specifically in different kinds of decision making, financial decision making, as you said before. We know each other from tax behavior, and which I also need to mention is that Barbara was a president of the European Association for Decision Making. So we have a real expert here. So, and we are really looking forward specifically to the question how tax practitioners are making their decisions, and how ethical they are doing this. Barbara, would you like to share your screen, please?
Can you see the slides now?
Yes, perfectly. Thank you very much. Thank you very much. And I'm looking forward to your talk.
Thank you. And hello, everybody. Thanks for coming. This presentation is going to look at a project undertaken with Elaine Doyle and Jane Frecknell-Hughes to investigate ethical reasoning and decision-making in tax practitioners. Sorry, I'm just getting a message on the screen. I'll get rid of that. This project arose out of Elaine's PhD studies, but it's raised a number of interesting issues about ethics in tax practice. Any errors and omissions, of course, are mine alone, and Jane and Elaine have no responsibility. So let's have a look at the problem. So basically, the issue we're focusing on here is tax avoidance. It's an issue that raises public concern in many countries. Internationally, it's become the focus for the Base Erosion and Profit Shifting Initiative of the OECD, the Organisation for Economic Cooperation and Development, and the G20. And there's been particular concerns about corporations avoiding tax, finding tax loopholes, and just managing to hardly pay any tax at all. And this has caused a reaction from the public. And I've actually got a picture here of one of the demonstrations against tax avoidance by Starbucks that took place in London a few years ago. So the general public and governments are increasingly taking the view that companies and rich individuals should pay their fair share of tax, and not to do so is an ethical issue. And it's not just a feeling of, oh, well, I have to pay tax, so you should. It's actually a recognition too of the relationship between tax and services. And the slogan, "They're our books, not Starbucks," in the banner links to this idea. So basically, tax practitioners are at the heart of this dilemma because they're the people who are offering advice to clients on how they should structure their affairs to reduce tax. And they're often seen as the people who are finding the loopholes, originating schemes, and maybe pushing the agenda of tax avoidance. This general idea of tax having uses rather than just being something you suffer was nicely made by George Osborne, who was then UK Chancellor of the Exchequer. And he's bringing out the issue clearly. He says, most wealthy people pay their taxes, and without them, we couldn't begin to afford the public services on which this country depends. I regard tax evasion and indeed aggressive tax avoidance as morally repugnant. So he's making clear that there's a relationship between tax paying and public services. Now, the argument when you talk about tax avoidance would be, yeah, but isn't it legal? Or else it would be tax evasion. And that is actually true in the sense that the difference between the two ways of reducing your tax payment effectively, one is legal and one isn't. But it's not as straightforward as that, because in jurisdictions where the exact meaning of the law is defined through case law, which is true in the UK and indeed in Ireland where we did the research, then things aren't so straightforward. Knowledge of what would be a successful interpretation of the law and therefore could be used in tax planning, as it's called, in schemes to keep tax at a lower level, and what would be found unacceptable by the revenue services, it just isn't clear in advance. And so we have this situation where a tax planning industry can arise just because we have the boundary between acceptable and unacceptable shifting all the time, driven by judgments in the courts and to some extent the attitude of the revenue authority. If somebody makes a claim for some sort of tax allowance that maybe they're not really meant to be getting, but the revenue authority doesn't pursue it in the courts in any way, then it sort of stands, and that can set a precedent too. So we can have a situation where things are uncertain and therefore there's a reason to try tax avoidance in an extent. So I thought I'd give you a nice example of this. I don't know if you would ever have seen these. These are Jaffa cakes. And basically
we have something similar in Austria.
Sorry?
We have something similar in Austria.
Yeah. They're a quite well-known, I would say biscuit, except as we'll see, that's a bit contentious. Now, basically, they're a well-known example of a court case about how an item should be treated for tax purposes. In this case, the manufacturers were making an argument that their particular product is not liable to VAT. And it was a court case eventually. So in UK law, the supply of food is generally zero rated for VAT, and that includes cake and biscuits, nice treat for people, except biscuits wholly or partly covered in chocolate. Now, as you can see from the picture, these items are covered in chocolate. And although they're called cakes, you can see them in the biscuit aisle in supermarkets. Now, McVitie's say that they are cakes. They have a spongy bottom layer. Sponge is a cake. Then there's the chocolate and some orange jelly in the middle. Now, they said, well, they're cakes, so no VAT. And the revenue decided this wasn't the case, because why are they in the biscuit aisle, of course, and took them to court. And you might think, well, how much are these Jaffa cakes? And the answer is under €2 a packet for a big packet. And it's not a lot, but of course lots of Jaffa cakes are sold. And if you establish this sort of thing, then similar products can make similar claims. And in fact, in the end, McVitie's won their case, and that there were indeed later cases with other sort of similar products, at least trying to be similar. In the end, McVitie's went to great lengths. They baked 12-inch Jaffa cakes. These are the size of maybe the palm of my hand. They baked full 12-inch diameter ones, which they took into court to prove that they were cakes. And in the end, they won on the basis that the difference between a cake and a biscuit, just in case you're not aware, is that when they go stale cakes are hard and stale biscuits are soft. And Jaffa cakes do indeed go hard. They're like little bricks if you leave them. And so therefore they are cakes. And this was a big deal for the company. They actually issued the giant Jaffa cakes as a special issue in the supermarkets. And as I say, that in these jurisdictions, you get that setting a precedent for similar products. So we've got a variable environment. There's not a strict rule as such until the court tests it. And another issue the practitioners face is that they have to do their professional duty. So professional ethics come in. And this is an example quote from the Chartered Institute of Taxation. And they said, a member's required to serve his client with professional competence and due care within the scope of the engagement letter. That's what he was asked to do. But they add, the recent public debate on tax avoidance has not changed the member's responsibility to the client. So what they're saying is the fact the public might not like people avoiding tax doesn't alter your duty to tell people the true situation. So tax practitioners are in a difficult position. They have to comply with the law, but they also have a duty to their clients, which might mean trying to bend the law a little bit, take a risk on a court case. There's a lot of situations where attitudes in the literature reflect the moral concern, and even organisations like the OECD have said that they see practitioners as contributing to the risk revenue authorities in countries have in collecting enough tax and negatively impact global tax systems. There's a lot of research saying, well, practitioners, they've just abandoned the public interest. Social welfare doesn't matter in favour of commercialism and what their clients would benefit for. And some of them consider all avoidance of any kind to be immoral and unethical. Although that's a bit tricky because the government actually, certainly in the UK, has some tax avoidance schemes for some groups like tax-free savings. Other researchers consider that if something complies with the law, it's ethical. But of course, we're in a situation where whether it complies is subject to debate. So it's all a bit messy. And it's not always clear what the intent of the law is. So saying, well, they're following the letter of the law, but not the spirit of the law, what it really was aiming at, what did that mean? So it's quite a difficult situation. But there seems to be some sort of general impression in some of the literature and in some of the press that maybe tax practitioners are perhaps not acting in the most ethical way. So why would this be? And we decided to look into it. So as a starting point, we decided to look at practitioners themselves and how they think about ethical dilemmas. Is it different to other people? On the other hand, is it something to do with tax? If we ask anybody to think about a dilemma that's about tax, would they think differently than they might in other situations? Is it something to do with the professional training that tax practitioners have? And so we decided to look at this in detail to see how they're reasoning about things. Now, I've made this talk so that you don't have to have any academic background. And I'm not going to talk in detail about things like statistics. I'm going to talk, though, about how we did the experiment rather than just jump to results. One of the problems we sometimes have when research is discussed in the press is that you're told a particular finding without understanding why people think that. So I'm going to show you why we think it, and you can see what you think about how we approached it. But you have a way to see how we came to the conclusions. So let's have a look at the first questions we're going to ask. So the first level of question is the level of moral or ethical reasoning in tax professionals lower than the population as a whole? So is the tax profession sort of attracting in people prone to low levels of moral reasoning? It's a possible. Alternatively, locating any sort of ethical dilemma in terms of tax might alter the way everybody thinks about it, in the way that some people are affected by whether the victim of a crime is a corporation or a person. Some things are referred to as victimless crime. So is tax seen in some sort of way like this? If that's the case, everyone will use lower levels of moral reasoning when thinking about tax dilemmas. And the other alternative we looked at initially is whether involvement professionally with tax affects your reasoning. So are tax professionals using lower levels of moral reasoning when they think about tax dilemmas? So to investigate that, we started with a thing called REST's Defining Issues Test, or DIT. And this has been described as a broad general measure of the level of moral reasoning. And it's been used extensively as a measure of ethical reasoning, including some studies about tax. So it was a good one to start with, because we're doing our investigation in a different way in some ways to what's gone before, but we're going to use the same basic instrument to start with. Now, one of the ways in which we're going to be different is that there is actually some concern about whether ethical reasoning as REST was considering when he brought about his Defining Issues test is really the same as how things are thought about in a business context. So basically, is it really that people think about ethics in the same way? And to some extent, that's talking about, is professional ethics different, maybe? And so what we decided to do was to have a specific test for tax, which is called the tax practitioner DIT. So this is different. Many of the studies use the moral reasoning measure from the original defining issues test to say something about how people behave professionally. But our research will show whether that makes a difference, whether that's reasonable. So let's have a look at how the defining issues test itself works. It gives people a series of ethical dilemmas, and this is an example. I'll just read it through. In a small European town, a woman was near death from a rare kind of cancer. There was one drug doctors thought might save her. It was a form of radium a pharmacist in the town had recently discovered. The drug was expensive to make, but the pharmacist was charging 10 times what the drug cost to make. He paid £200 for the radium and charged £2,000 for a small dose of the drug. The sick woman's husband, Heinz, went to everyone he knew to borrow the money, but he could only get £1,000, half what it cost. He told the pharmacist his wife was dying and asked him to sell it cheaper or let him pay later. But the pharmacist said, "No, I discovered the drug and I'm going to make money from it." So Heinz got desperate and he began to think about breaking into the store to steal the drug for his wife. And people are asked the question, should Heinz steal the drug? That's what they need to consider. And they have to decide that he should, he shouldn't, or they can't decide. They're then given a list of 12 statements about the dilemma and have to say how important each one is in their opinion in making the decision. And they have to say which are the 4 most important. Now, these are based at different levels of moral reasoning as defined by REST, which I'll discuss later. But examples could be whether a community's laws are going to be upheld. Simple, should he follow the law? Whether the law in this case is getting in the way of the most basic claim of any member of society. So, is the law getting in the way of the right to life, for example? So people are saying how important various rationales are. The test does have some checks that you're paying attention. So it has nonsense items. My favourite was whether Heinz is a professional wrestler or has influence with professional wrestlers, which is pretty immaterial. If people choose these, you know they aren't paying attention. There are also some things about whether it's a challenge to authority as a motivation for behaviour. And again, those don't count towards the score. So when they're looking at the responses people make, the statements represent different levels of moral reasoning as defined. REST puts levels into 3 groups called schemata. This is just effectively the plural of schema, and it's just his choice of term. And then knowledge structures that guide how people are thinking things through. And there's 3 of these: personal interests, so it's about how you behave in social interactions. How do you get a good deal? How do you keep people friendly and thinking well of you? The next highest level is maintaining norms. It's about morality of duty and law and doing things to keep society working smoothly. And then there's a third level of reasoning that looks beyond the legal to what's a good way to organise things and form a consensus of behaviour. And what REST does is to say that you're going to produce a score based on the level of this post-conventional schema. To what extent do you think about the real issues rather than just what's legal? And it produces a score based on the importance given to items in this category. To go alongside the DIT, Elaine developed a version where all the scenarios relate to tax. But there's more to it than just that. I mean, it does make it relevant to the study, but another issue, if you want to compare things, is whether there's similarity in the dilemmas and the statements people rate. So we have a test here where these statements are based on the same mix of levels of reasoning that the original DIT was. So that we make sure that the number of statements at a particular level isn't affecting the judgment. Elaine also went to some length to create dilemmas with similar issues. So here we've got her dilemma, which is in some ways similar to the one about Heinz. This is about allowances that are made to companies for certain sorts of financial outgoing. And she has a situation where the company's trying to claim the allowance when they're not really due to have it, but on the basis that they might, if they don't get the allowance, have to lose a lot of people's jobs. There'll be a lot of problems. A case can be put to say she should consider whether keeping the law is worth putting people through this misery of 5,000 people losing their jobs. So basically it's a situation where the tax practitioner is told that a new building's come into use, and if it's in the use at the end of a tax year, then they can claim an allowance. But she can see when she drives past it on the way to work that no, it's not in use. But they write and say, confirm that it is. So basically, it's got the same conflict between a lot of harm to people in general in this case, as the tax system supports people in general, and the feelings of the company. Now, we produced a whole set of these to match the DIT, and if anyone's doing research in the area, the full version of the tax DIT is published in our 2022 paper, and I'll put a list of references at the end. I'll stop for a few seconds, so if you watch the video, you can pick them all up. So let's have a look at how we did the testing. So we've got a test of moral reasoning and everyday social dilemmas, and a test with dilemmas in the tax contest. Our data was collected in Ireland, and an important aspect of this study is we compared tax practitioners and non-specialists in the same country at the same time. A lot of previous research comparisons were made with previous published results. And in particular, there were a lot that were compared to group averages compiled by the Centre for the Study of Ethical Development, which is now in Alabama, and which published REST's paper about the DIT. Now, there's a problem here. First of all, who's in that average? who's in any of the studies, and are they really similar people to the practitioners we're looking at here? And also, we don't know if things change over time. So REST published the actual study results in 1986. We did our results 20, 30 years later, and things have changed. A lot has changed in society, and America's nowhere near the same as Ireland anyway, in many ways. So we felt it was really important to have all our sample coming from the same place. And actually that has turned out to be important. So we took both the samples we had, tax practitioners and non-specialists. We gave both of them the tax DIT and the DIT. And we actually made sure half the people in each group did the tax version first and half did the social version, so that we know the results aren't caused by what you're exposed to first, what you start thinking about. And what that then allows us to do is to compare the tax DIT or TP-DIT with the standard social DIT results for each group and compare the results between the groups. We had 101 questionnaires from tax practitioners and 100 from non-specialists. Now, you might say that's not a huge sample, but it is actually very difficult to get busy professionals to do this sort of study. It takes quite a while to do the dilemmas, assuming you think about them, which is what we want. You've got to read the dilemma, read 12 statements, decide on ordering them. So it's certainly a good starting point for understanding the treatment of dilemmas. Quick reminder of our questions. We're going to look at moral reasoning in tax professionals versus others, whether the tax context alters things for everyone, or whether it's really to do with the tax professional. So we covered our 3 research questions with a set of statistical comparisons between practitioners and non-specialists and between the 2 DIT scores. So this is what we found. If we look at the social dilemmas, which is the left-hand column, the P score, which is the name of the score from the original DIT, there's no difference statistically between the groups. You can see the 2 points on the left are quite close together, but we did a final check. So we aren't in a situation where the tax profession is just pulling in all the people who are just generally less ethical than their community. Now, this was an interesting result in another way, because the actual measures of score were quite low here compared to the published averages from REST's database. And that means, had we compared just our practitioners with the general results in the database, we'd have said, oh, they're thinking a lot lower levels of moral reasoning. But because we checked them with a contemporary population, we're able to say that there actually isn't a difference. Some of this is about different countries and different times. So once we have a look at the tax scores, however, which are P score for tax then we do find there's a difference. The scores are statistically different, and the score for tax practitioners is significantly lower than the practitioners used in social dilemmas. So we did both comparisons. So they're lower than ordinary people in the tax context, and they're lower than the tax practitioners were when we looked at social dilemmas. So this means the public seem to be using a similar amount of high-level reasoning in both situations, but tax practitioners aren't. You might feel the non-specialist line, it's a bit horizontal, but not quite, but it isn't a statistically significant difference. So we're finding that something about the context is altering how tax practitioners think, but not ordinary people with no specialist knowledge. It's something to do with working with tax. So that means we've got our remaining research question. We wanted to find out if socialization or training affected reasoning, and we were very lucky to be able to get a reasonable sample of people who worked for the Revenue Service in Ireland. So basically we're able to compare people who worked for the revenue to people who worked in the private sector. Why does that matter? They've both got a lot of knowledge of tax, but revenue professionals are focused on collecting tax for the public good. So they aren't in any way focused on trying to reinterpret the law for someone's benefit. So when we compare that, put them in as a separate group, what happens? Well, when we rerun everything, we find that the revenue practitioners are actually very similar to non-specialists. They've come up as this second nearly horizontal line, and there's no significant differences in either context. The private sector practitioners are basically following the line we had before with a lower reasoning in a tax context. So it could be the way dilemmas are approached at work, or the society focus is making a different result for the revenue practitioners. So what exactly is going on here are the differences between private sector practitioners. There were reasons put forward saying that large firms had people to specialise in finding loopholes, or they could afford to go to court and have the specialist staff to cope with this. On the other hand, people said, well, small firms, they know their clients, they might do a favour. So we tested whether the small and the large firms in the sample were different. And basically, they're not. So whether you're in the big four, the biggest firms, or in the small single person firms, you're not much different in your results. We had some interviews on this which are useful, and I think the quotes here are from a tax partner at one of the big four. He says, moral boundaries, well, they're out there, but risk management boundaries are closer. You never get near moral boundaries because you hit risk management boundaries. And he doesn't necessarily see it as a good thing. It's meaning people aren't getting ethical experience. He says, I'd prefer if people's moral compasses were activated early on. I'd much prefer if people were responding the right way from an intuitive, instinctive reason rather than chapter 2 of the risk management manual. So could we end up with a situation where people come through the system never exposed to a moral dilemma? Yes, we could. Do I worry there'll be a fall in ethical standards? No, because risk management boundaries are tighter. Is it a good thing? No, it's better to have some intuitive knowledge. Interestingly, if the risk boundaries are closer, risk sort of a lower level of moral reasoning at one point. Looked at something from a smaller firm where they said, if I talk to a client, I wouldn't use the words ethically you should pay this tax. I'd put it to him the risk he puts himself and his business, family and employees in by not being tax compliant. If you start talking to a client about ethics, he thinks you think you're God and you have a revenue commissioner's stamp on the back of your head. Very sort of colourful metaphor there. Talk to people about risk, you're giving them good advice and they thank you. So although firms don't make much of ethics as an issue, risk management and retaining reputation is strong. Ethics are less clear-cut than risk, more worth a second opinion perhaps. It fits with this idea that risk is something you can talk about. It's that unknown element. You can't say ethically this is so, it wouldn't work any other way. So just summarising there. So if we go on and think about it, why are practitioners different? And one thing put forward in the literature is that professionals have more detailed understanding of tax law, and maybe they focus on that. Although revenue people do it as well, and why wouldn't they? And they behave quite differently. But there was past evidence that said accountants who perceived rule observance as important had less high moral reasoning than those who didn't. Again, though, the DIT produces a score based on the highest level of reasoning. And as I said, there are 3 levels. So what we had to do is find a way to formulate scores that we could compare at each level. And where we've done it, you can compare what's happening at each level, but not between levels. We do that in each level separately. So basically, we're looking at these 3 levels. Again, personal interests, maintaining norms, and that post-conventional past the law reasoning. So the question was, is the idea of maintaining norms or keeping to the law higher in tax professionals, including when they're looking at social dilemmas? Or is it that tax dilemmas will be higher than social dilemmas for tax professionals, but the level doesn't change for non-specialists? Or are they going to have higher levels of maintaining norm reasoning or personal interest treating than non-specialist or revenue practitioners because of their work? When we looked at the scores, we found that the score for the maintaining norms score, slightly wrong labels here, was actually very similar for the normal DIT as we found before in all 3 groups, And they all actually went up when they thought about tax dilemmas. So when you think about tax, everybody puts more weight on the importance of the law. So that was interesting in itself, because we know that tax professionals in the private sector reduce their high-level moral reasoning, and it's not because they put more emphasis on the law than other people. So that means somehow it's got to be about our third group, about the personal interest reasoning. And again, we find everybody's pretty much the same for social dilemmas. But when we look at tax, the private sector practitioners have higher levels of personal interest reasoning than the other groups. But it's not that they increase that sort of reasoning. It's the same as it was in social dilemmas. There's no difference. It's just that other people reduce the levels of this reasoning to accommodate more law, moral, maintaining norms reasoning at that level in the hierarchy. So basically, we've got a position where private sector practitioners are following a different mix of reasoning than others. And I've tried to put that together in one slide to give you a feel. It's the pattern of changes that matter. Post-conventional reasoning at the left, it's basically the same pattern as the standard score from the DIT. All groups the same for social dilemmas. Private sector practitioners showing lower levels of post-conventional reasoning. In the middle, with maintaining norms, we find everyone increases their level of maintaining norms reasoning. But to be able to do that, they have to reduce some other sort of reasoning to make room. Non-specialists and revenue practitioners reduce personal interest reasoning. And basically the private sector professionals reduce their post-conventional reasoning. They keep the personal interest reasoning at the same level. So let's look where that leaves us. Basically, private sector practitioners use lower levels of moral reasoning for tax. Revenue practitioners, like non-specialists, use the same level of moral reasoning in social and tax contexts. Private sector practitioners from small and large firms, they show the same behaviour patterns. When talking about ethics in practice, private sector practitioners talk in terms of risk rather than ethics. The difference in behaviour between private sector practitioners and others isn't about a focus on legal issues. Everybody focuses on them more for tax dilemmas. And to compensate for that, private sector practitioners reduce their post-conventional thinking, their high-level moral thinking, whereas others reduce personal interest level thinking. So what's going on? Why are people doing this? An issue with the DIT test, which affects our test too at the moment, is it doesn't consider professional relationships and involvement in a different way to relationships with friends and family. It may be that some practitioners maintain what's called personal interest reasoning because of this. They have to deal with conflicts in their role. They've got duties to clients, that need for professional competence and due care. They do have duties according to professional bodies, to taxpayers, revenue authorities. They have responsibility to the firm they work for to behave professionally, to the profession and themselves. And what they're doing is making clear risks to a client, but they've got a mix of duties, so they aren't pushing the same agenda they might in a different context. So focusing on professional obligations is different to personal relationships, but the only way it can be reflected in this sort of test. Professional obligations reduce focus on post-conventional reasoning for them, because it can't be professionally acceptable, really, to impose your personal morality on a client. This could be very much true where law has to be interpreted. Have you got the right? Practitioners can talk about issues and pros and cons more in terms of risk. Practitioners make clear risks and issues, and in the end, the client makes the decision. The existing tests don't allow us to go further because of all these competing duties. So it might be, to understand more, it would be good to develop a different framework for professional thinking. So that's sort of a summary. I said I would leave a list of papers, so this will be on the recording if anybody wants to follow up. As I say, the final paper we published, which is at the top, it has all the instruments that were developed.